Okay, so in this video, we're going to be back testing some time-based entry models and just getting a good overview on price. So this is midnight. Usually midnight, from like midnight to 8:30, I consider that the overnight, and I don't really trade that. So about here. Midnight to overnight, this is all just for collecting data purposes, and as you can see, the London kill zone from 2 to 5 has like a tendency of putting the high of the day in. So how you can get a good entry model is understanding just basic generic concepts, understanding that we just bumped above a high like this in a time, and this is the key part, in a time where you're likely to see a reversal. This is kind of what gives up that, and then looking down here, you can see this is pretty much a pool with low resistance. This is how you build a case on entries and having SMT right here. And the best part about this is when you're trading a time-based model, like you're coming to your chart at 9:30 like me, or 8:30, this is already printed. So you can always check if there's SMT in the London. You can always check if we're above a high. So this is what's really important about an entry model. And of course you have mitigation block here. This would be the first entry, short right there. Now this is a displacement. This is a market structure shift right here. Once this low went down like that, that is a market structure shift leading to a SIBI, which this would be the short for 9:30. Now you have to absorb this type of drawdown and put your stop loss above here. And if you shorted this mitigation, you put your stop loss above here, trusting the SMT. Giving you around 121 points. That's really good. Risking about 16. Now, if you use micros, you'll be fine. If you're sitting there thinking everything's about a mini, good luck on a $2,000 leverage Apex account. That's not good. But this is one good case study on how to trade with entry models. So as you can see here, again, we'll check the time. So between 2 and 5, this has a tendency of putting in the higher low of the day. Just a general rule. It's not always there, but it's good when you come to your chart at the opens or even the silver bullet and you want to see a run on stops. You just don't want to see any time of run on stops. You want to see like specific time. So like if you can see London nudge above a high like that and then break down, and then you can start looking at areas like this inefficiency here that wasn't fully covered in this is how you build up a case for a quality setup. As you can see here, breaker, price trades right into it. We're going to focus on this order block here for a short. Mitigation block is here. Price trades right into it. This is another short. And then dumps straight down using that first macro to purge sell side. Rolling into other models as like the silver bullet, but that's not, I don't really point to the silver bullet too much because my models are in between 8 to 10, which I am heavily focused on the opens. With this trade giving you, again, 121 points, risking about 39. And if we drop down to the 1 minute, we can find precision elements. So looking at this, we'll get rid of that. A trick you can do is take this high and project it down the full price swing, drop it down, and you can see levels to take profit, which one standard deviation is here, 1.5. We'll go to like 2 and 3, see what that does. And any retracement, so like from this low to that high, it's a retracement. Price came down, it retraced, and then it came down. You can take this and project it down and get good levels on take profit. So there's 2 and there's 3. And this is good case scenario take profits. This is the best. One minute SIBI here. Stop loss will go above there. So instead of doing a stop loss of 32 points that we had on the 5 minute, you can reduce it down to 10 points. And this is the most points I'm willing to risk on a mini, is around 10. Liquidity there, around $400, but you can trust your levels if you go more cons in down to here. And you work into these things. Understanding profiles is probably the #1 thing that you're going to need to hold runners. Checking out the 930. This is a retracement, right? So if you take the low of the retracement, it could be any retracement, and you just swing it down, you'll get levels to take profit at. So 930 SIBI was here. For a short. Offering you 45 points, risking around 10 to 11. This should stay open as a breakaway. One thing ICT said that stuck with me kinda was, when you have a low, any low like this, and price displace through it, if it has a fair value gap, that should hold. The first one. So price broke through that leg. First fair value gap was right here. That should hold. This should stay a breakaway. Same thing if you run into breakers. It's just any low that was impulsively broken through. So looking at this from an overview perspective, this was the SIBI for a short into liquidity. This was the 1 minute SIBI for a short into liquidity as well. These are your objectives, and it all starts with understanding a candle, the open, high, low, and close. This is where it starts. You don't have to worry about everything over here. Like anything past 1030, if you're still trading past 1030, you're just a rookie, and I would take that the nicest way. Don't trade. Me personally, I would say don't trade past 1030. Your models are going to reside around 830, 930. If you're with me. And of course, everything I'm saying is in the Patreon down below. Okay, so if you guys made it this far, I marked out midnight, and I want you to pause the video and think about where the draw is and what you see. Think about where the draw is and what you see. I'm going to pull up this for SMT purposes. Okay, so I'm too far back. Think about what you see. Where is the draw? If you sit down here, that's good. What I want to point out is if you do identify the draw, so if you say, okay, this is the draw, that is your best case, which means if this gets hit, don't look for other prices. You know, don't like scroll back and look for something. If you keep looking for a new setup, it's not going to go in your favor. Just understand that that first line you put on your chart is the best case scenario. It doesn't get better than that. That is the best. So if this is the best, looking prior to that, you have this inefficiency. This is really good. This is high probability. High probability. So, BISI. So this is really good. This is best. Above this BISI, you have another objective, which would be here. So now these are areas where you would be looking to scale out. Some here, and best case scenario here. Now looking at where price is at now, this is where it gets a little tricky. I'm going to mark out 930. So 930 is here. Are you guys nervous? Do you think that this would be a good short off the SIBI? Before I go further, comment down below yes or no if you think this is a short. Don't cheat. Don't scroll forward and then comment. Just say, I believe it's going to go down, or I believe it's not. It's just yes or no. Do you think 930 is just going to run buy side and then go down? This is where risk to reward comes in. Me personally, win or lose, and I'm kind of not familiar with the outcome of this, but win or lose, I would take this SIBI here and put my stop here. Now, at this moment, I'd be looking for SMT, but I'm cool with a 17-point stop targeting 37. I'm cool with that because I know it's consistent and I know I can take that type of a loss and afford it. So obviously this is the minis, but going to micros, I can do that. So we'll see how this plays out. So it spikes up, breaks down. Now what do you see? If you were nervous on the 930, you have a SIBI here. Let's see if it offers that. Okay, that's an IOFED. Let's see what else happens. Breaks down. Runs a short-term high. Pulls back up into the SIBI even more after the IOFED. Inversion. Now we have a retracement. So what I would do is take this and project it down. We'll go 1.5 standard deviations. So these levels look good. Now, mind you, this is best. I also want to point out my TP here was already hit. So from this 930 short, I did take some heat, dug into the breaker. It broke down and went and hit my TP and then propelled price off using the BISI. So my TP was already hit. This was good. This is really good. This is best. And the whole point is if you can identify where the liquidity is, which is here, you don't need that. You can use these. And as long as you stay consistent, you'll be good. Let's see how this goes. Okay, one standard deviation hit. And it just messes around. Don't really care too much on where it goes. That's how I actually trade. I don't care if it hits this. As long as I have a good run, this is what I capitalize off of. And it's in my window. Like I was telling you guys, anything past 1030, which anything past this blue line, going that way, that's not for me. That's not for anyone. Look at what it does. You don't want that. So yeah, that it's all about having a time-based model. So taking it back to here, where's price at? Where did it come from? Here, running this high. And then where's it going? Very simple. This and this. Understanding BISIs are like a magnet to price. If you can get a setup like this, this is clean. And boom, TP hit. And then propelling price, and then it just drops into a range. Before I remove these drawings, I do want to say, when you break down things on a template base and it's not an opinion. There's no opinion template based. It's what you know is a template. ICT does teach this. There's some stuff he doesn't really talk about too much, but if you follow his work, it'll be there. Like, if you are a Revamp member, obviously, and you're watching this, everything I'm saying, once it was revealed to you, obviously in the Patreon, once it was revealed to you guys and you go back and watch his work, you can see my stuff in there. He doesn't even talk about the shit I'm talking about. He doesn't talk about it. It's not, it's some things that he's just not talking about. If you just follow his work, like he asked, you will see it. And if you're a charter and you follow along with what he says to do, you see at the same time of day, we're all in there and trading. So that's good. This has nothing to do with inversions. Okay, this is like a textbook 930 setup. I like these ones where you have liquidity here. This is a pool. Price is just consolidating on the way up. It looks like a trending market, but when it moves like this and then breaks down, inversion here, when it leaves a SIBI like this, like I was telling you guys, an old low, if price breaks through it like that with a swing low like this, it's high probability, because this is a form of high resistance. I'm not going to go too much in that here because it's outside the scope, but once you have a SIBI like this offered at a time where it's likely to run, this is high probability. Again, this is retracement from this leg to that high. You take your fib, project it down, and you end up with this level 1.5. So using your 930 to your macro, you'll have a clean run from 930 to your macro. That's how you use time-based entry models. You have to have an objective. And if you're going to type in the comments and ask questions like, well, how do you know this? How do you know that? I have a Patreon down below. I can't get into too much things because it would consume the whole video. It would consume everything. You know, I can't explain every question. I just kind of post videos of what I feel needs to be educated on my Patreon, and that's just where it is. But this run down lower, I'm not looking for anything else over here. This is the run.